Assalamu alaikum, everyone. I hope you are doing well. Interesting day in the market. We had a pretty rough week last week, but we did have a pretty strong recovery today, especially in the names that we like to follow. We'll get right into it. The VIX is still above 20, even though it did recover somewhat. We are now at 20.52. But we peaked out this time around at around 27, and we've since pulled back pretty substantially. If you look at the indices, they were all pretty green today, especially the Nasdaq. It also was up close to 2%. The Dow Jones was up about half a percentage point. The S&P was up 1.5%, and the Nasdaq was up more than 2.5%. So pretty strong rebound there. Although still far removed from the highs. We're now at just under 25,000. The high was 26,000, or just about. MicroStrategy and other Bitcoin-related plays were up. Today, MicroStrategy was up 5%. Tesla posted a pretty strong day, up 7%, even though it really wasn't down that much in the recent pullback. So certainly not as much as other names, the one of them being Bitdeer. You can see the massive drop that we got in Bitdeer in a very short period of time. But the fundamentals for the company remain solid. And I think was a dip buying opportunity, really. I was more than willing to buy the company in the 20s after their latest earnings, and now we have the opportunity to buy it closer to 10. That just is a quick reminder that price and the business itself are completely different things. Often there is dislocation. Sometimes there isn't, but often there is. And when there is, those are the times where you can make some serious money. Gold is above 4,000 in a pretty solid way now, 4,100. Still not at its highs, which were close to 4,400, but decent. I'm sure if at the beginning of the year you told people gold was going to be above 4,000, certainly gold investors would have taken that in a heartbeat. Bitcoin, we'll talk about Bitcoin's price and what price we want to see before we can confirm a change in sentiment, and the fact that this isn't a bull trap, it's actually a genuine change in momentum for this asset. Later in the live, we'll tell you exactly what price point we want to see before we get confirmation. Ethereum is still shy of 3,000. Solana is at 137. So we're still talking about very depressed prices, but it just feels like we've had a pretty, we're in a pretty good spot because we had a pretty good day. Doge is at 15 cents, and Pudgy Penguins continues to be a bargain, I think, at these prices. So today I'm going to talk about what I think is on investors' mind, which is this bounce to be trusted or not? I spoke last week about the fact that I thought everyone was asking the wrong question. People were asking the question, is the bull run over? Have we missed the top? And really, I think a question that suggests itself, given the indicators that we were looking at, given the state of liquidity, given the state of monetary policy, fiscal policy, not only in the US, but globally, given all this data, the real question was, is it the end of a bear market? And is it the start of a bull market? Perhaps we had sort of the final dip, the sort of blow off top, but in reverse for the bear market that we've been in because of the quantitative tightening and because of the PMI being below 50 for the very extended period of time. And we're now sort of turning the corner and actually entering a genuine bull market. So is this the all clear signal that we got today? We can see the change in sentiment between last week and this week. And this is why you should really be a fundamentals-driven investor and not a sentiment-driven investor. Last week, this was from last week, we basically have a migration of money from the top left to the bottom right, which basically corresponds to risk off. Investors going from more volatile names to less volatile, more dependable names, but with less upside. And what changed is that someone from the Fed came out and said was a lot more dovish than the last hawkish guy, and the probabilities for a rate cut in December changed. They flipped. They went from being less than 50% to over 80%. And guess what? Nothing fundamentally has changed. There was no change in fundamentals. There was only a change in expectations, and this is what changed the market. And it changed it so much that now we have a migration from the bottom right to the top left. So now we're risk on again, and you can see that in the green squares that we got today. The fact of the matter is inflation should be, I'm hoping it's taking a backseat in the minds of policymakers in the Fed. Now, right now, trueflation, even though we're not going to get the inflation reading that we missed during the government shutdown, but we have trueflation, which is a lot better than any government number, and it tracks in real time inflation across the country using, I think, a more accurate methodology. And we're at 2.37 as of today for trueflation's measurement. And the Fed's target is 2%. So I would say we're pretty darn close to where we need to be with regards to inflation. And keep in mind this 2% number is just a made-up number that they took at random from the Bank of New Zealand, and it's not really based on anything, in economic theory, anything fundamental that needs to be seen. There's no real magic about the 2% number. It's just pretty much an agreed upon number that we've been using for a while, and so people think it's set in stone, but it's not. It's just a very general, I guess, rule of thumb that the Fed was using to gauge whether inflation was high or not. But at this point, it's 2.37, which is very close to the Fed's target. And so I think there's bigger fish to fry, namely unemployment. And I suspect that we're entering a period where unemployment will be the new focus for the Fed. So if you look at, this is from the Kubasi letter today, unemployed Americans with 4-year college degrees now make up a record 25.3% of total unemployment. So this is, I think, a lot of it can be attributed to AI taking the jobs, the entry positions that would typically go to these 4-year college degrees. The percentage has doubled since the 2008 financial crisis. This comes as over 1.9 million workers aged 25 and up with at least a bachelor's degree are now unemployed. Meanwhile, the unemployment rate for Americans aged 20 to 24 is up to 9.2%, the highest since May of 2021. This rate has risen 2.2 points year over year, an increase not seen outside recessions. The U.S. labor market is weakening across all education levels. So this is really what I think the Fed should be looking at when it's making its interest rate decisions. Now, I'm sure it's occurred to someone at the Fed, at least I hope it has occurred, that it may be the case that even lower interest rates don't really help unemployment that much. We made a comment on our X account a few days ago, basically observing that macroeconomic theory, as it relates to interest rates and falling interest rates necessarily causing companies to hire more, may be off this time around, because when companies have more money now, they can invest in AI to replace workers, not to hire more workers, but to replace them. So, paradoxically, the cheaper money may cause companies to invest more in automation where it can, and when in artificial intelligence, which actually exacerbates the unemployment problem and perhaps uh, accelerates the need to have serious conversations about things like universal basic income, because perhaps these jobs manifest in other places, but perhaps they don't. Perhaps we don't get the standard replacement that we used to get when new technologies disrupted old employment. We'll have to wait and see, but it's certainly something to keep an eye on, and will make the job of the Fed more complicated. That being said, I think what is clear, at least in the near term, is that it's not inflation that should be top of mind for the Fed. Rather, it should be unemployment. It seems like this is a much more acute problem that needs to be addressed. As it relates to crypto, we are still in deep fear, despite the bounce that we got today. So you can see here we're at a reading of 10, which is not that far removed from the lowest reading we got this year, which was around an 8 last week. And we did see as we bounced off the floor in terms of sentiment, we did also bounce off the local minimum in terms of price. And I showed you guys last week the fear and greed crypto index, and I mentioned this was basically a test of IQ to see where things would head next. And as was expected, I mean the lower reading on the fear and greed index proved to be a pretty good price point to buy at, as it has been throughout the history of not just crypto but equities in general, and I would say asset classes in general. Whenever there's fear, people don't like to buy. It feels painful to buy. People are reluctant to buy. The story is always that, oh, this time is different. We're not in a bull cycle, it's a bear cycle. The rules don't apply. But it inevitably turns out that buying when sentiment is low, when people are fearful, is a good idea. And yet, the next time it happens, people won't. They will forget. All right. So, what is the price at which we know for sure that this Bitcoin bounce is real? It's not a bull trap. Well, if you look historically, the 44-day simple moving average for Bitcoin has been a pretty good indicator for what the next leg for Bitcoin is going to be. And typically, when we are above the 44-day simple moving average, it's paid off to be long. When we were below it, it has paid off to be short. And so we continue to be well below the 44-day simple moving average at 88,000 as of taking that screenshot. But now we're just below 88,000, 87,800. And so until we see around 103,000 for a Bitcoin, there is no real confirmation that a change in sentiments has really solidified in the market. So something to keep an eye out for. As I always say, my job here is not to get you too high or too low, but to keep you, inshallah, steady and not FOMO buying into uptrends or panic selling out of downtrends. And I think it's still important to note that Q2 ends December 1st. So this is, I think, QT, quantitative tightening, ends December 1st. This is something that has been going on since 2022 and is finally, that's what you can see in the white here, with the Fed reducing its balance sheet. And interest rates coming up, and they've come down a bit, but they're still not at the neutral rate, which is around 3. So still 100 basis points to go. And yet, despite that, we're still well above the neutral rate, despite that we've been through quantitative tightening. Bitcoin's price, that's what you see in orange, continues to climb. And so this lends itself to the idea that we could get a pretty strong leg up here in the price of Bitcoin when interest rates fall further and quantitative tightening ends. And then in a few months, we get quantitative easing. So this is why I've said that the same analysts who are apologizing for missing the top, I think will soon be apologizing again for calling an end to the bull run prematurely. And I've seen a number of analysts saying, "Oh, we made a mistake. We didn't call, the top of this bull run." The fact of the matter is, I don't see why the bull run is over. I think all the indicators suggest that this is a pretty standard drop. We've seen it many, many times, whether it's in crypto or in equities. Considering the run that we've been on, it's a pretty standard correction, but the overall regime of the market remains a bullish one. This is my position, and I continue to stand in this camp until I see data that suggests it should be otherwise. All right, so I've extended the membership prices going up at your request, not once, not twice, but thrice. And so membership prices will not go up until the end of the month, inshallah, to give everyone who would like to lock in current rates an opportunity to do exactly that. Join our community. The more intelligent, halal-conscious people join, I think the more value there is. All right, so with that being said, let's go to questions. Salam, any updates on CoreMedix? Well, I think that investors are pretty nervous about the change in price that should come for DefenCath that should come mid-2026, but I think their concerns are a bit overblown. And I also think that short sellers are really hammering this stock and keeping it artificially low. Fact of the matter is, yeah, I understand there were some one-time income items in the last earnings report, but their quarterly earnings, if you annualize it, comes out to about $5 a share. If you look at estimates for next year, it's about $2 a share. The company is trading at around $10, actually less than $10. So you do the math on that. I think it's pretty cheaply valued. And, management has been executing. And so, I'd like to see management take start buying the stock. I think that would be confirmation. Definitely like to see that. And, if I saw that, I would definitely lean in a lot heavier. But, if you look at the numbers, certainly I think they are encouraging. Salam, alaikum salam. Would ETH fund be a good way to invest in Ethereum? I mean, if you want to invest in Ethereum, it seems like Tom Lee is the only person that's leading the argument for Ethereum, and his fund is, or not fund, but digital asset treasury company Bitmine is basically the main buyer of Ethereum. But if you've ever used it, then I can't really invest in something that I'm not a fan of. Ethereum is something that I am the opposite of a fan of. If you've ever used it, it's a completely, overpriced, very clunky, slow technology that is basically surviving on its name and its legacy, as opposed to actual utility that justifies its presence. Abdul Islam, salam alaikum, alaikum salam. Wanted to know your thoughts about ETFs for altcoins. Do you think they will have any positive impact on their value? Yeah, I think so. I mean, some more than others, but if you look at Solana ETFs, they've been basically positive since they launched. So that certainly has to bear positively on the price of Solana, if not now, but eventually. Alaikum salam, Khalid. Nice to see you. Salam, Dr. Hassan. Nice to see you. Hope all is well. What all the analysts saying that AI is a bubble with no profit or revenue? Do you also think the same? So this has been at the core of my hesitation to invest in some of these miners that have turned into AI plays, high performance computing plays, is that I'm not really sure about the margins here on AI. So to say that AI is a bubble, I don't think that's as a blanket statement that's accurate. Certainly, there are some pockets where I see like bubble pricing. I would say, at the top of the list, I think OpenAI. Last round of funding, I think it was $500 billion. Companies making 15 billion in top line. It's losing 20 billion a year if you annualize the last quarter. Valuing that at $500 billion seems bubbly. And as it relates to NVIDIA, if you look at the growth that it's had and it's expected to have in the next year, if you look at the PEG ratio, it's close to 1. So that doesn't seem like a bubble. Something like NVIDIA doesn't seem like a bubble. That being said, this is contingent on the growth for NVIDIA matching expectations. And so there's, some people see, okay, well, the growth right now, or I think they're putting it between 30 and 40% expected next year. That's just way, out of whack with what we can expect realistically. So, I can see, but, I would say NVIDIA, or I would say AI is going to surprise with regards to exactly how much value humanity ends up deriving from it, even with the lofty expectations that people have right now. And so to say AI is a bubble, I think is wrong. I think the impact of AI, the value that can be had from AI it's hard to overstate. But if you ask me, are there pockets within the market that are overvalued that are related to AI? I would say certainly there are. I would say, OpenAI, even though it's not a public company, but I think you can trade it maybe on Robinhood through like tokenized equity. But something like that, I think, is very overvalued. So you have to stick to the fundamentals, understand, the numbers behind the business. Like I said, I think NVIDIA is reasonably valued right now. Something like NVIDIA is reasonably valued. Even something like Google, I think, is reasonably valued. These are certainly, AI plays. You saw Oracle with the big, gap down after its deal with OpenAI and the life that breathed into its stock. It's quickly, reverted to the levels where it was at, and I think even lower. So, some are good plays, others are not. You just have to be familiar with the businesses, what exactly is driving the price. What's the argument for Pudgy penguins? Well, the argument for it is that I think that Solana is going to be what the dominant blockchain with regards to tokenization, and it makes sense that a chain like that has a token that is a good way to transmit value. And Pudgy Penguin seems like it's because of the branding and the inflation rate non-existent, and the physical products. It has the brand to make it popular enough to maybe fill that role. And so I can see people who are using Solana making payments, transmitting value using something like Pudgy Penguins. And if you look at the brand itself, it's generating close to 50 million annually, and so the brand itself has value. And so I think I wouldn't bet the farm on it, but I think that it has a decent chance of doing well in this next leg up. Sam, please talk about Sol. I think I just did. Are we still on track for the end of the year rally or after October 10th? Yeah, I think we'll end the year strong, Hamid. And I think that strength carries into Q1 and Q2 for the reasons that I mentioned in this live and the live before it. What's your approach to hedging against tech AI stocks? Well, I think it makes sense to have some diversification and see what assets, industries tend to move when there's softness in tech and AI, and have some sort of best of breed plays in that area as well to balance out your portfolio. I agree with your hate of shorters. They are literally preying on someone else's downfall. Yeah, it's nothing. There was nothing of substance contributed to humanity from short sellers. Nothing. Doge ETF, it's alive and kicking. I think Doge will do well with the rest of crypto when and if a rebound happens. Other than Tesla, how to invest into AI if you're not comfortable with OpenAI, NVIDIA, HPC? That's a good question, which I ask myself all the time. We do have a play in an HPC, like Bitcoin miner current HPC AI play. So without revealing, the entire portfolio, we do have a play. I would encourage people to become PIF members to see exactly how we play each sort of inning in this market. I think it'll be very useful, inshallah. What's going on with eggs? Are they short of chicken? Listen, I think eggs, wink, nod, are going to do very well for us. Pudgy or Doge? That's a good question. I would probably have an allocation to both, but I think the upside for Pudgy is probably higher than Doge. Jazakallah khair for your insights, brother. Appreciate your efforts. Well, it is my pleasure, inshallah. Make sure to take advantage of the opportunity to lock in your price before membership prices go up next Sunday, inshallah. And we really appreciate your membership, everyone in the community. Thank you all for tuning in. If you enjoyed this live, then do leave a like. If you're in the United States and you're visiting family this week, then make sure to enjoy yourself. And until next time, make sure to take care of yourself. Assalamu alaikum and peace be upon you all.